Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders, just like you, just like me. We gather here as a community to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance as a means for lowering our risk, reducing our volatility, and entering trades in which winners may run. But with that being said, even with all of that, trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I've been doing this a while. So long that my glasses are dirty. Crazy. I can't see a thing. I wear my glasses. I can't see a thing. I don't know. So anyways, look at this. Clean, 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 clean. Anywho. So I've been doing this a long time. Before Forex, I was a venture capitalist. Before that, I was a high-tech entrepreneur in the Silicon Valley. My first job in the Silicon Valley was working at NASA. Yeah, that crappy little rocket company. Like the one you don't want to work for. Isn't it weird? If I said I used to work for a rocket company, people now say, well, which one? Back then, you're like, what do you mean, which one? There's only one. Well, which rocket company do you work for? So anyways, and before that, I don't know. I guess I should mention George Soros. Worked on a board of directors with him. Yeah. Isn't that cool? I was 20 years old sitting on a board of directors for a company on New York City. Amazing. So anyways, that's me. So why do I say all that? Well, I look at Forex as a business. Businesses don't get rich quick. That's called the lottery or prostitution or dealing drugs or robbing banks. I've only done one of those and I'll never do it again. Never again, I tell you. So instead, I look at Forex as a business. I've always looked at everything I do in my life as a business. It has to make sense. You have to have strategy. You have to have planning. You have to measure, test, and reflect and adjust. And why do you do all of that? To make a lot of money? No, to provide value. So I think if you start looking at your trading as a form of value creation to make the universe a better place, eventually you will find that you will be more than compensated for beyond what you need. And the reason for that is you're creating more value. So think of it that way. The more value you can create, well, eventually the more compensation you will receive because the world and the universe will love you and want you to grow. Think of it as love. Love your way to profits. If you love money, you should love creating value. So if you think of it this way and you're like, Wayne, I don't know what you're babbling on about. What kind of trader are you? I want an E8 who trade 24 hours a day for me automatically and make me filthy stinking rich. So I can just lay in bed and count the cash as it just rolls in, as it falls out of the sky. How can I do less and less, Wayne, and make more and more? Okay, that's one type of trader. The other one says, I love being a trader. I want to learn everything about this. I want to know what more I can do. How much more can I learn? What more can I learn? Where can we grow? What else can I try? What else can I do? What more can be done? Because I love what I do. Which trader are you? I bet on the second one any day. So anyways, let's get on with it. In the description below, you'll see links to all kinds of resources. My book, it's pretty good. If you've read it, by the way, please leave an Amazon.com review. I'd love to have a lot of reviews, positive or negative. I don't really care. Honest would be great. On Amazon, because I do plan on releasing another book, a series of books, and it would, I don't know, I think Amazon would like authors that have a lot of reviews. That'd be great. Right now, it is one of the most rated books in the Forex category. Pretty interesting. So if you could do, that'd be great. If you prefer to learn from videos, okay, there's more than 65 hours of videos at FX Bootcamp. It's $88 a year. Come on. That's it. I mean, come on. That's it. There's also a link to tradersway.com, an ethical, trustworthy foreign exchange broker I've been working with for 7 or 8 years. They're an ECN. You click the button, the trade goes into the interbanking system. There's no in between. There's no dealing desk, for example. It's called straight through processing, STP. So they don't play around with your money. You click a button, boom. It goes where you asked it to go. That's that. Does it fast? Does it cheap? Does it easily? You even earn swaps? Tradersway.com. All those links are in the description below. And by the way, like honestly, if you have suggestions for additional resources you want me to contribute to, you're like, Wayne, I need help with this, or Wayne, I need help with that. Maybe I can help. I mean, I don't know if I can, but maybe I can. So honestly, let me know. Okay. Let me know what more can be done. Been doing this 20 years, so I'm saying if you need help, maybe I can't make some new form of resource for you today or tomorrow or this week, because it takes a lot of time and money and energy. But if I've been doing this for 20 years, maybe something can be done for you. Just takes time and money and patience, right? What's going on, Arlu? Rolu's here, everybody. Roger. Okay, and look at this. It's one of those days, man. On everything, huh? Whoop-be-doop-be-dip-be-doo. Up and down, down and up and down. Let me tell you where I'm at psychologically. And then maybe you'll understand. The way you see the light, you love me. Maybe you'd understand. Sorry, 90s. Sorry, 90s. Yeah, I know. It just reminded me of a song. I don't even know what song that is. All right. I'll tell you where I'm at. Yesterday, I'm like, I'm neutral. I'm neutral. I'm waiting for the election. I don't want to put new money on right now. I don't. I'm going to wait till tomorrow, which reminds me, actually, let me get something for you. A free resource. Would you like to trade the election with me? How about a 3-hour session tomorrow night? There you go. Look at that. Notify me, baby. Give it to me, baby. So in 33 hours, we can meet, and the markets are going to go wild. I've gone through stuff like this many times. Markets are going to go wild. I wouldn't make a big deal of it, but they will go wild. probably way, way, way up, and then way, 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 way down. And then on Wednesday, I believe the real trade will set up. But it'll be an interesting time. So I'm kind of thinking pizza and beer. And I have access, don't tell anybody. I have access to TVs. Well, you can see behind me. I can get like live coverage from Bloomberg, CNBC, Fox Business, Al Jazeera, BBC, CBC, eh? Okay, like so we can learn from Canada, the UK, the Middle East, all over the American spectrum. I can have CNN running. And we can just kind of pop around the world over, talking head to talking head to talking head, channel to channel to channel to channel, and just see how it all rolls in. Meanwhile, watch the markets. And then we'll probably get some scalps, but probably not keepers. You know what I mean? So, yeah, watch party, as Jimmy says. Right? Yeah, so, like I said, something will happen. Okay, something happened. And we'll have some fun with it. Hey, do you miss Fat Wayne with the beard? Yeah, me too. What time tomorrow? It says right there. Add 33 hours to your watch right now, Sniper. Let's synchronize our watches, everybody. Okay? In exactly 33 hours. Okay. 7 p.m. Eastern Time. Roger's going to pay it back. Huh? Well, I like cigars and alcohol. First class tickets to paradise. All right. So anyway, so look, what I'm trying to say is right now, I'm not even really looking for a new trade because I'm afraid I'm going to find a new trade. Okay. There's the watch party link again if you missed it. Yeah, I saw that, Darko. I haven't had time. Yeah, we had a little bit of a tragedy. We have a lot of deer on my property. And we had recently, we've had this 4-point buck hanging out with the crew. Beautiful animal. He's just been hanging around the last 3 weeks or something. And this morning, he has a terrible, terrible limp. He's been hit by a car, I think, or shot, one of the two. And so it was devastating, when you see an animal. So I don't know. So anyways, I was putting food out and all that kind of stuff. I saw your email, but I was putting corn out there in case, But anyways, hopefully he's okay. I don't think he's going to die. I don't know. If it's broken, then I don't know. So I don't know enough yet, but I just felt really bad. So I was kind of doing that. It's one of those things where you're like, damn it. I hope he's okay. Anyways, we'll see. Moses, yeah, plan your trade your plan, Asian fade and gaps. Learned it all from you. Right on, Moses. That's really cool. But yeah, so I should have time today to read it, I think. Yeah, do what you can. That's it. So I hope he's okay. So if he's just going to stay low for, a week and heal up a little bit, then I will do my best by, I put out, I have these jugs that hold, I'd guess 2 liters of liquid. So I put 4 liters, if you will, of corn out there for him. We also have a fox that is pulled into town. I was smoking a cigar on Friday after NFP, I guess, and I was just relaxing and doing some reading. And a raccoon came out of the tree right in front of me. He came down and went out for his breakfast. I'm like, dang, this is like living in a zoo. Denise says, do I have a salt lick out there? No, because I think my children would use it. We have salt lovers in our family. I actually had guests over last night for dinner, and I was cooking dinner and everything, and I'm busily, and they're just a couple of people are hanging around me as I'm cooking, keeping me company. And I opened the drawer, and they're like, no, I'm putting it on the protein. And they're like, what are you seasoning it with? I'm like, salt and pepper. And they're like, it doesn't look like salt and pepper. I'm like, oh, well, it's 6 different types of pepper and 4 different types of salt. And they're like, what do you mean 4 different types of salt? I'm like, well, and I open up the salt drawer. And we're like, well, we got this, we got this, we got this, we got that, we got this. This comes in from Japan. This comes in from India. This comes in from here, and all that kind of stuff. And yeah, so we're a salt-loving family for sure. When we probably, with no joke, have 15 different types of salt. So yeah, we're a salt-loving family. We're connoisseurs, aficionados of salt. So yeah, if I got a salt lick, my kids would be outside and they'd probably bring it in. I'm like, oh my God. All right, so anyway, so here's the breach of the channel. And this, I don't know how you look at all this stuff. So let me kind of explain my point of view. Not that my point of view is correct, but I have a microphone, so I might as well be the one that explains their point of view, huh? So we have this downward move, but look at these pops on the news events. So those news events are volatile. Okay, FOMC, NFP. So FOMC up, straight down, as expected. NFP straight up. And now we're going into a risk event tomorrow. And how do you read this? Are you reading this? Are you reading, how should I do this? I guess I'll switch this. Or are you reading it this way? There's a lot going on, but I feel like it's traders kind of getting in and getting out. Many of the big trades have already been removed because of all of the event risk, and tomorrow's a doozy. Okay. Himalayan salt, yeah, we have some of the pink stuff. It's good. I like to cook on Himalayan salt, or if you're American, Himalayan. I have a block, one giant piece that's probably 24 inches long and about, I guess it's only 2 inches thick. You can cook on it, but I used to have a much bigger one that I cook on, and they're fragile. You have to heat up the barbecue very, very, very slowly, but then you cook on the salt, which is really awesome. But now what I use it for a charcuterie tray. So what you do is you put the block in the fridge and you cool it off, and then it has a tray, right? So it sits on a tray, this chilled block of salt, one piece of salt, and then you put the cheeses and the meats on this block of salt. Now, the salt doesn't really make the food salty, but it stays cold. And the thing is, it's perfectly sanitized because it's salt. It kills bacteria. So anyway, so you can take it outside on a hot Georgia day, and you have cheeses and meats, and they're kept, cool while you're outside in the heat. And it's epic. Yeah, it's epic. It's really cool. They're like, wow, look at that. And that beautiful pink salt from the Himalayas. Okay. Now, if you watch Joe Rogan, it's funny because in his show, when they were talking about it, they're like, did you know the Himalayan salts don't come from the Himalayas? They come from Pakistan. They're lying. And I'm like, wait, they think the Himalayas is a country? It like Himalayan means the country of Himalaya? Like, I'm like, no, don't do that. And they were talking about it over and over and over again, looking it up. Wait, they're lying. It comes from Pakistan. So anyways, the Himalayas are mountains, yo. Okay, so anyway, I see huge risk, huge volatility coming. And I don't want to enter new trades. And in one way, and I've been preparing you guys for it, like, look at this and then this. That's a crazy day. That's let's say 7 days worth of volatility in one day. And the day following that giant move, what happened? All the way back. Okay, now we had giant gaps last night. If you were in the day trading group, you met with me last night, and one of the few things, it was a quick meeting, one of the few things we talked about was how to trade a gap. And cool. The gaps got filled. Okay. So anyway, what do you think? It could do this next, or it could do this next. And I don't know, dude. So I'm not looking to make a lot of money on the election. I think you're more likely to lose a lot of money. I think we could scalp and spot and pick up some pips here and there and have some fun and down some good pizza, some cold Mexican beer. Okay. But then the real trading is more like Wednesday, Thursday, Friday, that kind of stuff. Okay. So that's kind of where I'm at. I'm basically trying to keep myself market neutral. Okay. Yeah, so the idea with the gap is the gap fills. Okay. So that's that. And also, I'm still a US dollar bull. I understand the seasonality of what's going on, of course. By the way, did you guys get the report? The super secret, fundamentally based alert service sent out reports last night. I think the retail subscribers got 14 pages of economic analysis, macroeconomic analysis. And the professional traders got more like 22 pages. That's legit. Is there a case for dollar bearishness? based on the election results. Yeah. The Democrats lose big. There's a red tsunami. Okay. And what would happen would be the idea of a relief rally like that is that whatever's happening now ain't working. So if we fire the people in charge, it can't get worse. That would be the relief rally. Then, of course, by the time we get to next year, we find out, well, nothing's really going to change. So it's sort of like a honeymoon. Okay? Sort of a honeymoon election. Okay, a few weeks of good loving, and then you realize, I don't like this person. What did I do? Oh, no. I think it'll be like that, though. Like, what typically happens, guys, is that, you get this move that lasts to basically the end of the year, and then the whole thing is quite disappointing when reality kicks in. Okay. All right. So anyways, some dollar trying to roll over at key prices here. Okay. Like 115 here on the pig. That's a swing trade. Okay. Right. Let's see. If you're following that idea, this is similar. Same. It's the same, only different. What do you think? So much going on in the world. Okay. Maybe switch over, take a look, see what's going on in the yen pairs. Then we'll do gold, oil, and Bitcoin, huh? So it rained over the weekend for about 10 minutes. 10 minutes. The skies opened up and unleashed rain for a good 10 minutes. And then it was sunny and a beautiful rainbow. And to avoid getting wet, I stood under the belly of an A10 warthog. Oh. What? Yeah, because I was on the tarmac with the Blue Angels. And then it started raining. So I'm like, grab myself a warthog to stay dry. And if you know what an A10 warthog is, you'd get giddy like I did. So I've kissed a giraffe on the lips, but I've also kissed a warthog on the lips. Or at least on the nose. Narrowing the course of your lecture. Oh, sure. Why is it weak? Maybe people that are buying US dollar are exiting out of that position because of the election tomorrow. Jimmy says a rain there. Cats and dogs. Rain, cats and dogs. So right now, so again, to answer this question, why is the dollar suddenly weak? Well, that's a sell zone because that's how technical analysis works. But this is a buy zone. So you might say it's weak. Someone stepping out further away, 4-hour, daily, weekly, they just see this as not going anywhere. So look, we had the intervention, drop 500 pips, up 300 pips, down 200 pips, up 150 pips, down 100 pips, up 75 pips, down 75 pips. And this is kind of doing nothing. And then boop, boop, boop. So you're like, it's weak. I'm like, it ain't doing anything. What do you mean it's weak? I mean, it is weak. But it's just a simple little day trade. That's all. Isaac says, I've eaten warthog and I'm an actual chef. I've had warthog. I think technically what I had was boar, but I like food. I'm not afraid of much. And when I was in South Africa, Ryan took me to a great wild game place. And they're like, oh, hey, welcome to South Africa. Hey, have you ever had alligator? And I'm like, yeah. I'm like, oh, really? Have you ever had rattlesnake? Yep. Oh. Have you ever had, and we start going through all these have you ever hads? And I'm like, yep. Oh. And finally you're like, have you had zebra? I'm like, no. I'm like, oh, then we're going to have zebra. Have you? And my favorite though was the eland sausage. They had spicy sausage made out of eland. Oh my god, it was really good. Yeah. So I like game food. If I opened a restaurant, I've had this idea for a restaurant for 30 years. I know what it'll look like. I know what it's called. I can practically put the menu together for you. But yeah, I would own and manage a game restaurant. If I opened a restaurant, it would not be a cheesecake factory. It would not be an Outback Steakhouse. It would not be an Applebee's. But it would be a very high-end, fancy pants game food restaurant. Yeah. Yeah. Goose, trout, bison, boar. Okay. Yeah, for sure. All heirloom animals, all heirloom vegetables. Yeah, venison. Oh my God, for sure. I like moose. I like ostrich. I think that might have been one of them. Like, have you ever had ostrich? I'm like, ostrich or emu? They're like, ostrich. Oh yeah, I've had both. You know, like if you take bison, ostrich, yeah, just bison and ostrich, you mix them together. Very, very good hamburger. I'm telling you, very, very good. Yeah. Venison stew. Oh, for sure. Oh, that'd be so good. Yeah. I would have a stew on the menu. I would probably serve it in a wooden bowl. One of the things I like to make this time of year, in fact, is coq au vin. But I'll use some spicy sausage in there. And sometimes instead of the red wine, I'll use bourbon. A bourbon Coq au vin. Oh, decadent. Decadent. All right. So that's that. So dollar's weak right now. You have to remember, what's the prevailing trend? Dollar strength. So now we don't have dollar strength. Doesn't mean we have dollar weakness. We just don't have dollar strength. So what could it be? How could we possibly describe the market conditions? Well, those whom were buying US dollar have exited those trades during a period of high risk and high volatility. And then at some point we'll want to re-enter those trades because nothing has fundamentally changed. Okay. What are the odds? I think are pretty good, actually. I think we will have a short-term rally, most likely. I say that just because I've run into a few people that know people. Okay, so secondhand knowledge, not primary research, secondary research. I know people that normally always vote Democrat, and they're not voting Democrat. So they're in a situation like, I can't vote for Herschel Walker. I just can't. There's no way that's even possible. I'm talking about in Georgia, right? But it's also impossible to vote for a Republican. Or is he a Republican? I don't know. Whatever. Sorry. I don't know. I just can't vote for Stacey Abrams. Whatever the party is. I don't know. They just can't vote for the person in their party because they're so extreme and not good. Extreme one way and not good at anything. And so they're like, they can't vote for that candidate, but they can't vote for the other party. So a Democrat cannot vote for a Republican under any circumstance. A Republican cannot vote for a Democrat under any circumstance. But what do you do if you don't like your party's candidate? You're like, I don't want that idiot either. So they're either not going to vote or they're voting, sort of for an independent candidate, a libertarian candidate. And they're like, sort of a none of the above. They're like, right? That kind of stuff. And not just in the state of Georgia, a few other, just a few other sort of anecdotal, collection of data tells me that Democrats are in trouble. Democrats are not happy with Democrats. So I don't know how it goes down. It'll be interesting. So is there a chance is there a reasonable chance the Democrats can lose control of the House, the Senate, or both? Yeah, I think so. I think yeah. Yeah, I think it really could happen. So that would create a rally based on what's called a relief rally. That's why I call it more like a honeymoon, where there's this euphoria of, well, if what has been happening isn't working, then we have something new, and that something new probably isn't worse than what we just had. Now, I'm not making a comment on good or bad. Up to now is good or bad. We all have our opinions, and I certainly have mine, but that's not what I'm trying to share here. The share is any discontent with the status quo creates tension. And so if the status quo is going to change, it's a release of the tension. Ciao. Okay. And whoa, yay, right? Something new. And that something new very often creates a risk on euphoria. but I don't think it's not truly a fundamental change. Six Dog, where do you download the chart templates? All the chart templates for MT4 and MT5 are available inside of FX Bootcamp. Consider it a free bonus for all members of FX Bootcamp. There's a whole download section. There's hundreds of files. And every single member, for the $88 a year membership, not only does it include an amazing amount of video content and special events, but also all the hundreds and hundreds and hundreds of files and the installer that installs everything for you automatically. It's all there. So I guess Isaac and I are going to open up a restaurant. That sounds pretty good, man. I'm excited. I want you to do all the work. I'll design everything. I'll name it. I'll pick out the menu. No, you're the chef. You'd pick out the menu. I'll name it. You do all the work. Yeah, it'll be good. Heck yeah. Where are you located? Bronx. That sounds pretty good. All right, so I propose we open 2 restaurants, one in or near Manhattan, and the second one in Napa Valley. Fly back and forth, back and forth. Good food in the Bronx, too. All right, so we'll move. Let's do gold, oil, and Bitcoin. Well, Isaac, I was thinking of the original Delmonico's right there off Wall Street. I'm just amazed that it's empty. I'm like, COVID really hit Manhattan. There's a few times I've been walking around the city and my heart is broken by an establishment that's closed permanently and ain't coming back. Delmonico's, the original one. Right? Carnegie Deli. Right? My cigar bar I used to go to. What's that one right off of Bryant Park? It's been there 100 years. It's gone. Oh, I can't think of it now. It's funny. It's dead. It died. It's gone. Yeah, just sad. I mean, yeah. So I was literally walking around the corner. I'm like, that's Delmonico's, and it's closed, permanently closed. I'm like, oh my God. But I guess maybe, I mean, yes, you'll always have tourists that want to look at Wall Street, but Wall Street's so quiet now. You'd never get a New Yorker that wants to go that far downtown for dinner, huh? That's probably why it's dead. The newer place in Midtown, it's too pretty, it's too clean. Windows are too big. Did you guys hear Luger's? Peter Luger's has lost its Michelin star because steakhouses are off the cool kids club list. Everyone's woke now, so you're either vegan or rich white men or out of favor, and all this kind of stuff. So this idea of the rich Wall Street a-holes that go to some fancy steakhouse with wood on the walls and brass on the lamps, and you get your $150 steak, and then after you drink your bourbon, smoke your cigar, those guys are now out of favor. And so those types of restaurants are losing all their awards because they're not popular with society. The food hasn't changed. And I'm like, but I'm a rich white guy that likes steak and drinks bourbon and smokes cigars. But that's me. That's me. I'm okay with Peter Luger's. So anyways, but yeah. So anyways, so they've lost their Michelin star they've had for, 100 years. And yes, and by the way, a Michelin star is from the tire company. You have to realize when the car was invented, people didn't know what to do with the car. So Michelin, who sold tires, said, well, you can drive out of the city and go somewhere like Peter Luger's. You can drive out there, have dinner, and drive back to Manhattan in the same day, right? Well, check this out. You might know that, but you might not know this. The person who holds the patent for briquette charcoal that you would use during a barbecue is Henry Ford. See, the idea is you can get in your car, drive way out to the countryside from the city, have a picnic, and then drive home all in the same day. That was one of the major benefits of a car. You can go 15 miles away and come back. And so the patent holder for the briquette is Henry Ford, because they were trying to pitch a use for the car. So driving out, making your own food, or driving out to a restaurant was very important. So that's where the Michelin stars come from for restaurant. It was all trying to show that you could use a car, that it had a use case. All right. So anyway, so this is what I said last night. Bitcoin, don't want to do anything. See, I'm neutral. That's what I'm trying to share with you today. I'm looking at everything and I'm neutral. Okay. Don't want to buy it. Okay. Now going back to, I guess, was it Thursday? It must have been Thursday. We had a discussion in the swing trading group. Yeah, the swing trading group. We were here, and one of us, Darko, wanted to buy gold. And I said, yeah, you're probably right. You'll probably make money. Makes sense to me. A triple bottom is a triple bottom. And if you're wrong, you'll learn pretty quickly that you're wrong. However, I said, it seems to me, especially when we were kicking off this area, right? And then this other kickoff with the FOMC meeting, right? And then we're down here for Thursday. I said that it seems to me there's still a lot of downward pressure, that it's still bearish. So you could buy it, and we talked about it as an income type trade where you buy it, it's a day trade, you make some money, it's only about the money, but it's still technically counter trend. So you could do it, but you're only likely to get back up into the ribbon, which is now the case. And so inside of that, you might be thinking, Do we go from here or do we go from down to here? And you know the answer? That means you should take profit. Oh, thanks, Denise. Yeah, I'm a funny guy. Like when I go to a museum, I read things. And I generally remember. So I have a lot of useless information about history. So I annoy people. Okay. Yeah. So anyways, Bitcoin, not really interested. Gold, basically, I think if you took the triple bottom shot, you should probably take your money off the table. Don't worry about it. Well, what if it goes up? You shouldn't be thinking about that. If you're in a profitable trade, you shouldn't say, well, what if? First of all, you do technical analysis. There's not like, what if it goes up? No. You do technical analysis, and then you should be able to figure out the level of risk. There's not a what if it goes up. It's terrible to even think that way. You want to look at the probabilities. Okay? It's not an opinion, it's a probability. But also, what about tomorrow? Tomorrow, the probability isn't really up or down. The probability is high volatility. And so if you truly are risk averse, that upsets you. You're like, I don't want high volatility. All right, well, then if you got money on the table now, maybe you take profit, unless you're in it truly for a much longer period, long term, right? Like if you already got 700 pips profit or something on a trade, okay, you should probably survive it, but maybe not. So like, look, you got to make decisions, but there's no idea of like what if. No, analyze it, make a decision. There's not what if. Okay. All right. That's where we is. Oh, look at this. That's interesting. I did this last week. I drew this here. Was it during non-farm payrolls? Probably, huh? I was showing how to use price action? Or was that 2 days ago? No, that must have been Friday. So here, look at this. I drew it here, and now that's where it gapped down to. Very interesting. So now we're in this range, this pretty little range. I am a bull, by the way. I am a bull. I'm a bull. Okay, so that's probably the better move here for trading. I think this is much like oil is oil is oil. Like there's so many problems with oil that it almost supersedes all the other nonsense. Okay? We just don't have enough energy. Okay? We don't have enough food. We don't have enough copper. We don't have enough cobalt. Don't get me started about chromium either. Oh my God. Okay? We don't have enough stuff. Kids these days don't want to dig in the dirt for a living. Hey kid, you want to be a farmer? Okay. The answer to that is nope. The average farmer in the United States, the average age of a farmer in the United States is 57. It's not enough farmers. What are we going to do in 10 years? I want you to think about that. Are we going to have robots farming in 10 years? America's not that quick. Okay? For 30 years, we've been talking about using the internet to have a paperless office. Okay? There ain't no paperless office. So, I am building a portfolio around that idea. If it's stuff, okay, then we're not going to have enough of it. Prices are going to be high. By the way, I think there's also a true affront, if you will, to globalization. Partially, I think it's, if not mostly, it's because Chinese workers have caught up. So in the macroeconomics class, we talk about catch-up growth versus other types of growth so that you can compare different types of GDP. And I don't mean GNI versus GDP. No, what I mean is different stages of economic development, GDP. Okay. And China's at that point where China ain't cheap. Partially because, well, we've invested heavily there. Everyone is, the workforce is way more educated. They've moved from the farms to the cities and all that. But also because of the one-child policy. Okay. So when you start looking at that kind of stuff, China doing more on its own, the United States nearshoring versus offshoring, okay, like American companies, we're going to make semiconductors in America. As President Trump said, why can't we make iPhones in America? Well, because then they would be $3,000, Mr. President. Okay? So there's been this catch up, and if we're going to do less stuff in China, which means sending money to China and they send us stuff for cheap, we're going to do more here. You get less benefit of trade. And by definition, by the way, I cover this in great detail, hours of covering how this all works. But just if that's the new thing for the next 10 years, that is inflationary. Not because it's bad, not because it's good, it's just because of the policy. It's like you can't get mad at physics. Physics is physics. You can't get mad at economics. So when you trade with a partner, and I explain this in great details, radios versus bicycles, okay? You shift your possibilities frontier curve. You actually get more for less, and both countries are better off. But if both countries have caught up, where both can make bikes, both can make radios with no absolute advantage or any comparative advantage. Maybe they stop working with each other, but what happens, and this has gone on, there's, a couple of thousand years of economic study. Really, it's after the Black Plague where capitalism really kind of starts. So going all the way back to the Venetians, let's say, or what's escaping me? The other city on the other side of Italy, on the Mediterranean side. Not the Venetians, the Genoese. Going back to studying economics from then forward, it just creates inflation. If you study even before that, Machiavellian Italy of city-states, the only way to grow was through war, and there was very little trade. And so, the cost, let's say, of economic expansion was high. But what would happen is you get to a point where your economy, your tiny little economy, a little city-state, grows to the point where inflation kicks in, where every worker needs more money to buy more stuff because the economy is not expanding. But then the problem is it also creates shortages, which creates more inflation, which creates more demand, which creates more. And then you get to the point where people are buying stuff not to use, but to hoard. You're not buying rice to cook a meal today. You're buying rice because you're worried there won't be rice in the future, and your family will have rice while other families starve. And that's a whole different type of response, economic response. We call that reflexivity, by the way. Okay. In a normal world, what you have is economic cycles, right? Boom, bust. Boom, bust. 10 to 12 years in between, right? And all that is, if you think about it. So one of the things we do a lot, right? Okay, let me draw this. Here's a business cycle, okay? But here's potential GDP on the long run. And one way you can look at that is, okay, the economy cools off, we go into recession. The central bank or the central government kicks in, changes the situation, and we go back above potential. And then we have a red hot economy and everyone's got jobs. And then we get inflation and everything. And then it all crashes back and it comes back down. So it's like lower interest rates, raise interest rates. We did that for 20 or 30 or 40 years until the point that didn't work. So then you lowered interest rates but did quantitative easing. And then you ended quantitative easing, but you didn't raise interest rates. And then it comes back. And that works for a while until something changes. And the new model might be like this. And that's reflexivity, where what if at first prices go high because the government prints too much money. And then inflation goes too high because there's no stuff. Everybody bought it with the stuff with free money. See, when you have free money, everybody's rich. But there's not enough stuff for everybody to be rich. We can't make more than there is money, but you can make more money than there is stuff. Usually income is tied to some sort of service or product. Okay, money is exchanged for a product. If money is just money and there was no product, no service, now there's more money, so everybody's got this money. So you go out buy stuff you don't deserve. And by deserve, I mean your GDP should equal, right, how much stuff you buy. Your income is tied to your productivity. Did you produce any activity? Did you contribute all to the economy and to society? And that productivity is tied to income, so you can never have inflation. But if suddenly there's income but no productivity, now there's all this extra money. So the second wave of inflation is you go out to buy stuff, but all the stuff has already been bought. There's no stuff. The factories can't make stuff that fast because everything's bought up. So so that what I'm describing now is sort of this period in here. But usually what happens, because usually it's not money, it's credit. So credit gets things going and then credit takes back, and maybe the money, if you will, is destroyed through valuation destruction, but not through actual cash destruction. But now we got something new. It's actual stimulus money, $5 trillion of unnatural money in the economy. So there's going to probably be a third wave of inflation, not from just too much money, devaluation of a currency, and not from a scarcity, which a scarcity of anything drives up prices. But what if you get to the third one, and this is where reflexivity comes in, because what if, for example, people start hoarding? How does that work? Prices go up because prices are going up, which then pushes prices up, which makes prices go up. There's no reversion to the mean. Because the Fed can't destroy the money. They can only destroy the credit. They can make sure you spend less on your credit card. They make sure you don't borrow more for your house. They might make the value of your house fall. They might make you lose your job. All of that is credit. Okay? If you own $1 million house but have a $500,000 mortgage, and your house drops from being worth $1 million down to only being worth $750,000, $250,000 of credit is gone. That was destroyed. You're like, Wayne, what do you mean $250,000 of credit? Well, your house was worth $1 million, but you didn't sell it. You live in your house. Your house was worth $1 million. You own $500,000 to the bank. So you have $500,000 in equity. But the value of the house drops by 25%. You still owe the bank $500,000. You still haven't sold your house. It's just now this invisible profit has dropped from $500,000 to $250,000. It was credit. You could have borrowed against the house, withdrew the credit by destroying your equity, but now you have cash or some other asset. But now that value, that invisible $250,000 is just gone. It's destroyed. And that's how like the Fed kind of side of all of this works. They issued credit to the economy. It got issued out slowly to productive things, because remember, an asset is productive. Banks don't lend you money so you can spend it at Disneyland. That's not how it works. Okay? Cool. So what if there's all this money, that unnatural money not attached to productivity? How do you get the money back? Well, this is what reflexivity looks like. We're hoarding depression. We'd have to be below potential GDP. And then something happens down here. Okay? So my friend and mentor, George Soros, talks about reflexivity like this. This is I haven't read any of his books, so I hope I got it right. But that's how I understand it. So maybe we'll put a George Soros book on the reading list soon, huh? Maybe we need to read it soon. Because we haven't been in a situation like this for 40 years where this could happen. Remember, George Soros is old. He was old in 1995 when we were on the board together. 1995, he was old. He was 100 years old then. At least he looked it. At least to me when I was 20. So now I'm old. George Soros is still around. But that's what he was talking about, back in the days. So that yellow line could kind of be our future. And the thing is, the average person on Wall Street isn't old enough to know this information. It's not in the textbooks, and it's never happened in their lifetime. Right? People can't imagine 5.5% interest rates. I would call that normal. Okay? I would call that normal. We haven't had it. For example, I could tie this together in a different way than what you'd probably hear on TV and stuff. But I would say, low interest rates in the United States, low inflation, okay growth in the United States was achieved first and foremost by global trade with China since 1990. Okay? And I think that period now might be over. If COVID and then the crash of the supply chain by China's response to COVID permanently has changed the way we do business globally, then America will have high inflation. And yet the politicians don't seem to understand that. You can't say China bad, inflation bad. Because if you say China bad, you're going to get inflation. If you want to lower inflation, say China's good. China's good. You might not agree with their political system, but why do you have to agree with their political system? Why can't we just trade? Okay? See, when we trade together, we win together. They want growth. We want low inflation. That's called a beautiful marriage. China's cool, man. China's cool. Make sure you go to China and check it out. Search says shift to India. Yeah, but in many cases, Americans are talking about bringing everything home. A resurgence of American manufacturing. That's inflationary. And it might be good and safe, but I'm telling you, maybe I should do an experiment. Maybe I should go to Home Depot and show the row of barbecues. All right, stainless steel barbecues. They have tons of them, and smokers. They have tons of them. I should change the prices. Okay? The $500 barbecue is now $1,350. Okay, the $900 barbecue is $2,700. And I should change all the prices and see what happens to the sales. I bet you they fall. So then what happens? Then the barbecue manufacturers make less. See, demand falls, then the supply falls. So now prices go up even further. If you're rich enough to buy a barbecue, now you got to pay $5,000 because there's not very many barbecues, and therefore the manufacturing cost per unit is very, very much higher. You have to build a whole factory just to make a small amount of barbecues, right? So now you're basically paying for the whole, right? So it all just collapses. So then the next surge says India. Yes, I think India is going to win the game 25, 30, 40, 50 years from now. I think they'll surpass China, or let's say catch up to China. China will be quite old. India will be much younger than China. India is not growing anymore, which is very, very good news. But it's still quite young compared to China. And I've been all over China. And the infrastructure that is built there is incredible. Okay? Incredible. So you have when you do like China, okay? Shoot. Hang on. Okay, so we'll do China first. Okay, so okay, China has had a high level of investment, and then I think will peter off soon. Okay, so that's investment, I. And I think what will happen soon is depreciation will go higher than investment. And productivity, aka GDP, is going to go like, well, that I didn't do that one quite right. We'll do like, and then, okay? And we'll call that GDP. Okay? All right. So that's kind of, we want to look at here. And that's where we break. Does anyone remember what we call this, by the way? What do we call this? Where we get sort of peak productivity. Thank you, the steady state. Ashish, that was perfect. Absolutely perfect. Bravo. Yeah, that's the steady state. Okay, and that'll shift back and forth. If you fall below the depreciation curve, then you just have to increase your investing, and then you'll get your, you'll always do that. So if it slows down, you add some stimulus. If it speeds up, you remove the stimulus, and you're always getting back to this steady state, and therefore your productivity stays pretty consistent. And so the average for the United States is 2.2%, but going 2.2% every year for 50 years, we're in a steady state. Okay? You learned it at the macroeconomics course you taught me. Yeah, but you actually remembered. Jim took it, and he doesn't remember, right, Jim? Just going back to the museum comment earlier. All right, so there's China. Okay, and now if we look at India, okay, the investment curve is, used to be like, like this, and then, And I think what will happen is the investment curve is going to look like this in the future. Where I've been around India. I've been to Chandigarh, Jaipur, Delhi, Agra. So that's sort of West Coast, Northwest, West. So I've been to the mountains, I've been to the deserts, I've been to the cities. So I've seen a bit of India, and boy, it could use some investment, huh? So some of the airports, for example, are beautiful and some are not. So anyway, so what'll happen for a while is the depreciation curve. So India was poor and then it's becoming rich again. Its investment will be much higher than its depreciation. Okay. This is investment. So as money, what we call direct foreign investment, DFI, as money shifts away from investing into China and instead investing into India, then the Indian productivity over the next 50 years is going to go like, that kind of stuff until investment levels off. Okay? And so when somebody says, will India do well? I have to go through this entire model. How will India do versus China? How will Malaysia do versus China? Well, you have to start looking at all this stuff. Okay? And you're like, well, investment. What's needed for investment? Because you're like, we'll just invest more money. Okay? How do you get investment? How could I restate this? More I requires more what? You can't just have more I. Remember, it's investment. Investment is a form of capital. So you can turn your I into capital. But that's not what we're talking about. How do you get I? Investment can buy you capital. It can buy you talent. You can buy your human capital, or it can buy you physical capital like a machine or a factory, a building. Entrepreneurship, no, that's just labor to the alpha. So you guys are on the factors of production. So you have capital to the alpha, that's technology, plus labor to the alpha. But that's entrepreneurial. That's entrepreneurship. Better capital and better labor, but those are just your basic factors of production. But that doesn't get you I. Because look, think of it. No. I, what is I? Investment. What is investment? It's money. If you have money, you can buy better talent. You can invest into education. Right? That would be for labor. You can buy education. You can buy training. You can make your workforce better. And if you just need a bigger workforce, you can just buy more workers. Not a problem. If you need to increase your efficiency and lower the per unit cost, which is all microeconomics, you can just buy better technology, better machines, newer machines, more efficient machines, less energy intensive machines. So money just buys you that. But what kind of money? What equals I? So let me tell you. I is equal to, okay, there's your I. I is equal to savings. What is savings? Income, which is a different I, minus expenses. Okay? Okay? Now you can break your expenses into consumption or another I, investment. We'll do a little I. Okay. What is consumption is just a waste of money. You converted money into a sandwich. You then convert the sandwich into carbohydrates. And then you burn that in the form of energy or gas. And it's gone. You consumed it. It's gone. Where'd that money go? It went to the guy that baked the bread, the guy that made the sandwich, the guy that owns the shop, the guy that owns the building, the lady that runs the power company, so on and so forth. Now it's their income. So you're just converting your money, because you earned income. So here's your money. You convert your money into a consumption. You eat it, burn it, whatever you do, it becomes someone else's I. That's why it's not actually inflationary. For example, if you convert your money into a television that you bought at Walmart that was made in South Korea, you get a beautiful TV for cheap. You also sell the dollar in exchange for the TV because the dollar goes into the interbanking system, gets converted into South Korean won, and that currency goes up. And now that company gets paid, and now it's their income. Meanwhile, that low price that you paid lowers inflation because you're getting an awesome TV for cheap. But the income leaves the United States, selling the dollar, and then becomes an income somewhere else. Or over here, what could you do with your money? If you don't consume it, you can invest it into a house, so you own your house and the house goes up in value. You could put it in a retirement account and save it for when you get too old to work. But meanwhile, that money gets converted, and put to work in the stock market. Okay. Or you can leave it in a bank account. Okay. Buying a house, investing into the stock market, or keeping it in a bank is called savings. Savings is productive, and therefore, because it's money that's productive, it's a form of investment. And investment is what makes the economy grow. It's why poor countries are poor, because the money they have is not turned into savings or investment. See, savings is equal to investment. Income minus expenses. So you have to pay your rent. You have to buy food. You have to have shelter. Ideally, medicine. Hang on. Okay. And whatever's left over, I don't know. It just doesn't get converted. Maybe it's just put in a coffee can. Okay. And hidden in the freezer. But it's not productive. You see that? Edward said, so India's central bank needs to raise interest rates to attract investment? No. The central bank needs to oversee an economy that is growing and growing in productivity and demands investment because it's the best economy in the world to deploy your capital. So you have to think of an American. American says, well, should I invest into should I build a factory here? And you're like, well, it's too difficult to get permits. The taxes are too high. The employees are too expensive. And they suck. They're not very good employees. They're slow, they're lazy, they're mediocre quality. And you're like, I don't want to build a factory here. So India talks to this company and says, build it in India. Why? Well, we have a workforce that's young and cheap. They're hardworking. They're smart. They're educated. They speak English. They're entrepreneurial. They're looking to build a career. And as a government, guess what? We'll give you loans and tax incentives, right? Cheap loans, tax incentives, and we'll make sure that you're on a fast track for permit approval. It'll be quick, easy, and cheap to do this project in India. If India did that, you got yourself a factory. But they're talking to the Americans, they're talking to the Dutch, they're talking to the Germans, they're talking to everybody, right? Build the factory here. If India did something like that, it would be the next wave, especially if they're like, hey man, what if China goes down? What's your plan B? Why don't you build plan B in India first and foremost? And then India says, if you do that, you build your plan B in India, in 20 years, it will be your plan A, because we'll be better. It'll be easier to do business, less risky to do business in India than in China. And again, that's a sales pitch from the Indian point of view. And so, yeah, that's how you would do it. But before you get started, we need better seaports. We need better highways. Or we mean in India. India needs better seaports. India needs better highways. India needs better airports. India needs better telecommunication. India needs just more organization and more basic infrastructure. Right? Like India is still a place where you can go to a nice restaurant, park your Mercedes on a dirt and gravel parking lot full of potholes and wild dogs running everywhere. And then you go inside and then the restaurant's beautiful and everyone's dressed nice and the food is great and it's all modern and just wonderful. You're like, wow, this is a real nice restaurant. Then you go back outside and you're like, be careful, there's wild dogs right everywhere. And you're and there's garbage everywhere and everything. And you're like, oh my God, welcome. But India's wonderful. How would tax treat this? Well, again, taxes are a form of inefficiency, right? By the way, like if you're in India, if you're Indian and I just insulted you, by no means did I mean to insult you. India's cool. India's great. It's tough when you're there, but you miss it. You miss it when you're gone. When you're there, everything's a bit of a hassle, but it's cool. It works out if you can roll with it. It's amazing too. You're just like, wherever you go, it's amazing, but it's got challenges, right? But as soon as you're home, you miss it. You're like, the whole time you're there, you're like, this is tough. It's hot. It's dirty. It's crowded. It's loud. And then as soon as you get home, you're like, yeah, I miss it. I want to go. I wonder when I'm going back to India. Yeah. Harshit's like, yeah, I'm from India and he's saying the truth. Yeah. Yeah, no. I don't mean it in a bad way. It's just, I try to be factual. And the only way I can be factual and then share, people don't remember facts. You have to paint a picture. Okay? You have to paint a picture. But I think it'll win because it is democratic. They do speak English in India. There is education. Right? Some of the smartest minds I know are from India. Okay? But not everyone in India has a PhD. Why is America expensive? Because if you're going to teach third grade, you need a master's degree in the United States. I'm like, what? They're 3. Give them some chocolate pudding to make pictures and then have story time and then they take a nap. But in America, you need a master's degree. Oh my God, to teach third grade. And then do you remember the time when it was like meet the teacher day? Your mom would go to the school and sit in those tiny little kid chairs in the library, and the teacher would say, well, Wayne is a capable student, but he does need to pull up his socks and focus a little bit more on his, right? That's what it used to be back in the 70s and 80s. Now, for third grade, you sit down and there's a team. The teacher, the assistant vice principal, the school psychologist, and some other person. There's like 4 people in a room with PhDs, and they bring out the book. Well, let's see how your child's doing. You're like, you don't even know how my child's doing? And they bring out a 2,000-page book. And there's psychological profiles and all this stuff about your kid, and they're like, wow, like, oh my God, you guys are idiots. Like, why is teaching so difficult in the United States? And why do we need all these people with PhDs overseeing my third grade child? Right? And you're like, yeah, wow, sounds expensive to me. So there's good and bad with every economy. And somewhere there's harmony. We call that a steady state, but you want, right? You want I and D to be inside of a sort of normal potential GDP. The original one where I showed you there's a business cycle. Oops, let's do it this way. There's a business cycle, right? A boom and a bust, but inside there's normal. I got to do another color. Okay, and right, normal growth, GDP. Potential. This is the yellow line is potential GDP, and then the pink line is actual GDP. Or should I think they follow you no matter what? I'm telling you, I've never seen an angry dog in India. They're the happiest dogs. No cats, though. I said, hey, how come you guys don't have cats in India? Is it the dogs? And you're like, no, very auspicious. I'm like, I don't know what that means, but you guys sound smart. Ravi, a lot of monkeys. Yeah, well, it depends on where you are in India, but yeah, I think I was in Jaipur in Rajasthan where, yeah, every once in a while you realize you're surrounded by these monkeys, and they're like, they're thinking about it. They're going to come down and beat you up. You just can sense it. All of a sudden, you get that sixth sense. If you've ever wondered what that sixth sense is all about, go hiking in the backwoods of Canada where there's bears. You'll very quickly learn what that sixth sense is all about. Or walk through a crowd of 200 monkeys in India, and you know what that success is about, because they're looking at you and they're like, we're going to jack this a-hole. All right, guys, take his glasses, take his bag. You're like, yeah, bad news. Bad news, man. You can sense it. Hey, fellas, look at this jerk here with the sunglasses. He's new. Huh? One monkey says to the other, hey, is that Eminem? No, I think it's Alec Baldwin. No, it's Marky Mark. Ah, well, whoever it is, let's go get him. Let's jack this fool. Those monkeys are great. Is that right, Robbie? That's really cool. Yeah. Yeah, don't run, right, Robbie? Or Harshit, right? Don't run, but don't turn your back either. You got to eyeball these guys. Rahil says, why was the Aussie strong on Friday? Let's take a look. La, la, la. Okay. Well, on the daily chart, it says it's not that strong. Okay, Rahil? So let's drop into a smaller time frame. Okay. What do we see here? What do we price Aussie dollar in? If we fixed Aussie dollar, one Aussie dollar on Thursday is one Aussie dollar on Friday. On Saturday, it's still one Aussie dollar. On Monday, it's still one Aussie dollar. Okay? So, what happened? If one Aussie dollar was still one Aussie dollar all throughout Friday, what actually then happened, Rahil? How would we describe the other side of the equation? You would say it's up. It was up almost 3% on Friday. Listen to the language here. In terms of what? In euro? Was it up in terms of euro? No. No, it wasn't. Was Aussie dollar up 3% in terms of New Zealand dollar? No. Okay. So in terms of US dollar, that answers your question. The US dollar collapsed on non-farm payrolls. Unemployment went up, dollar weakened. It had nothing to do with the Australian currency. That would be relative to something else. That would be relative to the economic conditions of Australia. And yeah, it was slightly up. Okay? But it had a lot more to do with this coming down. So there was a little bit of up on Australia, but quite a bit down on the dollar. Combine the slight up with the significant down, you get a 3% change in the exchange rate. But it's mostly USD and had nothing to do with Australia. Okay? It benefited a little bit from risk on. That's what happens when the US dollar weakens. Okay? Cool, eh? Oh, for sure. So I hope you had a good day today. Hope this was a successful live stream. Would you please click the thumbs up button on the way out? Oh, thank you, Rahil. Yeah, well, I've lost 40 pounds. 40 pounds. Yeah. So maybe I did some volunteer work to raise money for charity on Saturday, and there was a big crowd there, and I was working the VIP section, and someone I hadn't seen in like, I don't know, 2 years. He's like, Wayne? I'm like, hey man, how you doing? Have you lost weight? I'm like, yeah, 40 pounds. He's like, I barely recognize you. He's like, I wouldn't have thought it was you. Someone else pointed it out. Yeah. They're just like, wow. Cool. So anywho, yeah, but I appreciate the compliment. I'm an only child. I love compliments, so shower me with love and affection and attention and tell me I'm great every single day. So I'll leave you guys to it. I will see you later. Today is Monday, so I'll be meeting with the live trading group. The day traders will meet at 4 p.m. Probably be another quick and easy. Not a lot to talk about before the big event tomorrow. And then we'll all meet Tuesday morning here at Forex.Today. We'll burn through the charts. Then on Tuesday afternoon, early afternoon, day traders will be meeting with Ryan for the Stop, Look, and Correct session. Wildly popular, by the way. And then we will skip the 4 p.m. meeting on Tuesday. And then everybody here, we will meet to do the election. On Tuesday evening, we will do the election right here, a 3-hour live stream. Bring your own pizza and beer. Probably get a few scalps in. Should be fun, should be entertaining. So we could do that together. You are not alone. I am here with you. Yeah. So we can do that together. So please register for that. Please click the notification. If you're not a subscriber to the FX Bootcamp channel, please do that. And I appreciate you. And I will see you again soon. Have a wonderful day. Peace on earth. May the pips be with you. May your profits be above average. Hey, that just happened.